This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices lower in the overnight trade. This linked to reports that the U.S. government is taking steps to curtail or possibly eliminate the inversions situation that some U.S. companies have initiated for tax purposes. Also, we have increasing tensions in the Mideast, also a negative for the stock index futures. However, keep in mind that since this bull market started in March of 2009, we have had a variety of geopolitical problems that temporarily took stock index futures lower, only to be followed by new highs for the move. And I think that will be the case again this time, as interest rates remain low and continue to be the dominant influence on the stock index futures. So even though futures are a little bit lower, now I think we can see a move back to higher on today, still thinking that the bull market is intact. Over in the currencies, lower interest rates here in the U.S. Over the last 3 days, finally putting some pressure on the U.S. dollar. Normally the dollar would be higher in a flight to quality move with what is happening in the Mideast, but that not being the case today. Also, we have the euro currency trading higher, even though we did have weaker than expected economic data out of the Eurozone and in the areas of manufacturing and services. However, there's a good chance that a good portion of these gains will be given back in the euro, as traders, I believe, will focus on prospects of more accommodation from the European Central Bank in light of their weakening economy. Also seeing the yen firming in a flight to quality move. Although already we've seen a lot of these gains given back in the yen, I would not be surprised to see the yen trading lower on the day. Longer term, still looks like the yen can work lower. Also looks like the yen will be the weakest performing of the foreign currencies, so this is a trend that is likely to persist for quite some time. So continue to trade the Japanese yen from the short side. And in the interest rate markets, last week we started to see futures performing well on mostly negative news. So we have seen some follow-through strength now over the last couple of days. In fact, the last 3 days. Also, we do have a lot of supply this week, and yet futures are holding up very well. So would not be surprised to see some follow-through gains, especially for the 30-year Treasury bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.